case is about section B type 1 case based OTQ. Okay, now it's time for section B type question. You know very well that this section of exam contains 3 OT cases, and each OT case contains a scenario related to 5 OT questions, and each OT question is having 2 marks. So let's start one case based OT questions. Now come on. Okay, this is a question. Very first thing, what you should do, read the question very carefully and first identify which content area examiner examined here. Start. Hyundai company is a large company which has been reviewing its working capital management. Okay, this is about working capital management. Very interesting. Working capital management. Okay. So Hyundai has received an offer of discount of bulk purchase from 10D company. Okay, this is something about 10D company, one of its major supplier. 10D company has offered 0.75% discount on orders 30,000 units or more for component X. Okay, this is something about discount points, and that's related to supplier, and it's about the supplier, so that is something about trade payable matters. The current purchase price of the component is $20. The Hyundai company currently consumes 120,000 units of component X each year and place an order of 10,000 units at the end of each month. So that means order quantity size is 10,000 units, order quantity size, and 1,20,000 units the annual demand. Holding cost of component X is $1.2 holding cost, and ordering cost per order are $1.25. Sorry, 125 US dollars. This is something about 10D. And the very first question is about 10D. What is the financial consequence of accepting bulk purchase discount from 10D company? Normally, although it's a one OTQ case study, but one OTQ case individually, OTQ, it's not interlinked with another one. So you can independently attempt one by one. Okay. So first one is the 10D. Second one is the Salvo company. And third one is about something Carlos company. Okay. So first we can attempt with the 10D company. The question is about Hyundai and we are going to attempt the first case that is about 10D. So focus first point. This is something about discount evaluation. Discount evaluation. What is the financial consequences of bulk purchase discount from 10D company? So let's start. The benefits having 4 options, and you need to solve this point. You need to solve this point. So this is what you need to analyze the situation. Right now, the holding cost given, that is $1.2. Ordering cost given, $125 per order. Order quantity, that is 10,000. But supplier offer to move the order quantity size from 10,000 to 30,000. 10,000 to 30,000. So we need to evaluate the position. How much the change in cost of ordering, change in cost of holding, and discount itself. So first of all, a very basic point, very basic point about evaluation of the discount. So let's start. Okay, let's start. How need to work out? No? So very basic one. For example, if I'm saying that discount, what are what the benefit we are able to get? No? That's simple. Here we are purchasing 1,20,000 units. Make it simple, quick, huh? 1,20,000 multiply by the price is $20, and suppliers offering a discount of 0.75%. So this is what the absolute benefit of the 18,000. But the point is that, definitely holding costs will increase. Holding costs will increase. And this is something now the order quantity size is 10,000. No minimum inventory, no buffer stock. Average divided by 2. But now we are working for 30,000 divided by 2. Here, examiner not mentioned to change any holding cost per unit, any change in holding cost per unit. So we are considering that the same holding cost, that is 1.2. So previously 10,000 divided by 2, now 30,000 divided by 2. Previously average 5,000 units, hold the average 5,000 units we will hold. Now if we accept the discount, the average holding quantity is 15,000 on average, multiply by 1.2. So that means this is minus 12,000. Minus 12,000 here means, minus 12,000 means that's here the cost will increase. But what about the ordering cost? Number of orders, automatically that will reduce. Previously 1,20,000 divided by 10,000, that's a previous one, that means the 12 orders, minus 1,20,000 divided by 30,000, number of orders become reduced, multiply by 125. That means 1,000 cost you can save on a yearly basis. So the saving of ordering cost, increase in holding cost, saving and discount, that's need to sum, that's equals to 7,000. That's simple. That is called net saving. Net saving, that's benefit of 7,000 per year. 7,000 per year. That's a point. That's very simple. The first question we have done it. Huh? Now the another question. Now the another question. What is the financial consequence accepting early settlement discount from Salvo company? Early settlement discount. Now come on. Salvo, a major supplier, once again, supplier of component M of duty has offered a 1% early settlement discount. That is something about early settlement discount. Early settlement discount. Payment within 20 days. Payment within 20 days. Duty company currently takes 60 days to settle outstanding invoices. Currently, we are taking 60 days. So actually, here we need to pay the amount 40 days earlier. Huh? That means payment within 20 days, 40 days before. Huh? That's we are compromising for the 40 days. So the point is that where we need to arrange, where if we pay this amount within by 20 days and actually arranging the amount 40 days before, so our working capital cycle become disturbed. How to arrange the finance? It's about the bank OD or like others. Okay. D&D company currently takes 60 days to settle outstanding invoice with Selvo and equates $3.3 million as trade payables. To remember, it's a payable, not the purchases. Okay. D&D is due to sell to Carlos. That's another case. Furthermore, the last para, the cost of short-term finance 5% through overdraft. And assuming there are 360 days in financial year, 360 days. Question is financial consequences of accepting the early settlement discount from Selvo. Benefit was benefit. So here you need to develop your mindset. You need to analyze benefit versus cost and need to calculate net benefit. Now come on. Selvo company. We need to identify the benefit and benefit in term of discount received. We will receive the discount. Okay, discount. We will work out for the discount. Versus cost. Cost here, the finance cost. Number one, benefit. If we really wanted to know about the benefit, so benefit is in terms of 1%, benefit in terms of 1% multiplied by purchases. But here we don't know amount of purchases. Here we don't know about the purchases. So if we have trade payables and trade payables amount 3.3 million, 3.3 million, 3.3 million. The days we are working, that's equals to 360 days. You can do it and right now the trade payable days, TP days, trade payable days, that is 60 days. So we can found the purchases. You can directly calculate on the calculator, don't worry about it. Is equal to reverse working. 360 multiplied by 3300,000 and divided by 60. That's a purchases. Is equal to, you can work out directly, 3300,000 multiplied by 360 divided by 60. That's simple. $19,800,000. That is the purchases. And the discount, if you wanted to calculate, that is offering a discount of 1% into 1%. That's 198,000. That's 198,000. That's a point. And what about the cost? The finance cost? How to calculate the finance cost? That is trade payable now. Trade payable, that is now. If we accept the discount offer, so our days become reduces, our trade payable increases and have to arrange uh, the working capital finance from the bank. So trade payable revise days, that's given a 20. That's given 20 days. So that means trade payable revise, TP revise, TP revise is equal to what? Is equal to trade payable 20 divided by 360 multiply by purchases. Purchases remain same, that is 1,10,000 is equal to 20 divided by 360 into 1980. That's a value for your convenience. These are the trade payable revise. So you need to compare this trade payable that means trade payable decreased by previously the level of 3,300,000 minus 1,100,000, that's decreased by 2,200,000, and finance cost increased by 5%. This is the finance cost. This is the finance cost. That's done. Don't worry, this Excel file will also be available. Just click the link. So the difference, it's net benefit of 88,000. The net benefit of 88,000. That is the point. Difference of net benefit of 88,000. Net benefit of 88,000 per year. 88,000 per year. 88,000 per year. That's the point. I hope it's very clear to all of you. Now the next point. Come on. 2 questions we have done it, huh? Now next one. Which of the following is annual percentage cost of the discount? Annual percentage cost of the discount given to Carlos and receiving 15,000 within 30 days. Okay. That is about Carlos received 15,000 within 30 days. Okay. Carlos, now class, your concentration is required. D&D company is due to sell goods to Carlos. Sell goods to Carlos. That is something about receivable. Costing 15,000. Costing 15,000. The terms of the trade state that payment must be received 120 days. Okay. Payment 120 days. However, discount of 2%. Discount of 2% will be given for payment in 30 days. Payment in 30 days. So right now we are offering to our customer the credit term of 120 days. But now we are offering the 2% discount for the early settlement payment within 30 days. And the amount receiving that is $15,000 within 30 days. And you need to calculate annual percentage cost of discount. Annual percentage cost of discount. Now, come on, Carlos. The question about Carlos. Yes, come on. Number one, if you wanted to calculate annual percentage, so first of all, you need to calculate discount proportion. Discount proportion. What does that mean? Discount proportion means that you are offering the discount of 2%. 2% means if your customer is paying 100 with the credit term of 120 days, now you are offering for 2%. So you need to calculate the proportion in this manner. Is equal to 2 divided by 98. And do remember that this proportion of 2.04%, this proportion of 2.04%, that 2 over 98, it's for the cycle of 30 days. It's a cycle of 30 days. No, sorry, it's not a cycle of 30 days. Wait. With this discount proportion, the saving periods means here cycle. That is about 120 minus 30. 120 normal offer minus 30 is equal to 90 days. That means you are asking or you are offering to your customer to pay the amount, or you are expecting to collect amount, or customer will pay the amount 90 days earlier. So the cycle you wanted to incorporate here, that's 90 days. So for that 90 days, you need to calculate yearly. This cycle on yearly basis, 360 divided by 90. That's 4. That means that's 4. That means whatever you are offering here, that means whatever you are offering here you are offering 90 days early payment. Normally you offer 120 days, but you are offering to make a payment within 30 days. So you are asking of 90 days earlier. So 90 days earlier means on an yearly basis, the cycle will happen for 4 times. That is 4 times. So discount proportion of 2.04%, and this will apply 4 times. So this 2.4% actually it's only for 1 time cycle. That's it. That's only 1 cycle. And the 1 cycle reflect here the 90 days early. So the annual percentage here 2.05 multiplied by 4. That is 8.16%. Sir, what are you talking about? Actually, whenever examiner asks annual percentage cost of discount, annual percentage. So with receivable or payments, you can apply a formula mentioned in the Kaplan. This is a formula. I know that there is a formula, but it's not the exam formula. You need to learn this formula, or you can work out with my style of working. For annual cost of discount is 1 plus discount divided by amount led to pay, power number of periods. And number of periods is equal to 365, 52 or 12. That depends on the availability here. For example, the days, a number of days, weeks or months earlier the money is receivable. Either you need to apply this formula. If not, go for this. I must say here, don't need to learn this formula, because this formula is not available with the examination. So why you people are doing something to learn and make a burden in your mind? But it's your wish, either to learn this formula and apply that, or either use this steps. Whenever examiner asks annual cost of discount, annual percentage of discount, you can apply with this manner. First you calculate, now listen carefully, discount proportion. How? You offer the customer 2%. It's very simple. 2 divided by 98. What is 98? If you offer the 2 out of 100, the remaining is 98. If you offer the 4%, that's 4 over 96. 5%, 5 over 95. So it's simple percentage. But this is the percentage, it's not earlier. You need to multiply with some factor. What factor you need to multiply? That's called saving period cycle or cycle. Here, first you need to identify normal payment terms 120. You are offering the 30 days. So the saving in the cycle of 90 days. 90 days cycle. So you need to apply 360. 360 is the days divided by 90. If the data given in the months, for example, 1 month earlier, normally 2 months, normally 3 months. Now you are offering for the 1 month. So 12 months divided by 2. Here 360 divided by 90 days. 90 days means 90 days early settlement. So that is 4 times. That is times. 4 times. Then that simple 2.04 multiplied by 4 times. So this is not 2.04. It's a 1 cycle percentage multiplied by 4 times. That's annual percentage. That's all. That's simple, rather than to mug up the formula. Rest your wish. Okay, that's about this question. So that is about 8.16. 8.16. Answer is 8.16. Answer is 8.16. Okay, next. Examiner asked with OTQs, the mixture of theory and calculation. So 3 OTQs that's of this case study, it's about calculation. Now the remaining 2, it's about the theoretical content. Now come on. Which of the following statements are correct? Okay, this is the content about working capital. One by one, read it carefully. Don't be in hurry, huh? Don't be desperate to move forward. First, carefully read the content. Factoring with recourse means that that means due to a company, don't have bad debts insurance with the factor. Okay, that's recourse factoring. That's the statement is true. Huh? It's very simple. Invoice discounting can increase the efficiency of trade receivable management for company. Second statement. Companies are expecting to receive foreign currency or foreign account receivable, will be concerned about risk of foreign currency depreciating against domestic currency. Statement number 1 is absolutely right. With recourse factoring, the company, like Duty company, it's not possible to insure the bad debts. Point number 1 is absolutely right. Point number 3, for example, skipping point number 2, companies who are expecting to receive foreign currency receivables, concern about depreciating of foreign currency, it's against the domestic currency. That's a risk, and that's absolutely right. Absolutely right. Point number 1 and 3 is right. But the question is that, is the point number 2 is right? Read the point carefully. Invoice discounting. What does that mean? Invoice discounting means, for example, I have $100,000 receivable debtors of a specific customer. And now I'm going to negotiate with the bank against this 100,000 receivable. Give me 95,000, 5% discount. And I've arranged the 95,000. Do remember, if I have sold my debtors with invoice discounting, the bank will not collect, bank will not contact to customer to pay the amount. Because if customer become default, I will compensate to the bank. So that means with invoice discounting, it's only to arrange the money. It's not about it's not about to increase the efficiency of trade receivable management. It's not about to increase trade receivable management. It's not increase the efficiency. Efficiency matter happens, or efficiency is about the point where we we make the strategy to collect the receivable earlier. The surety of the receivable become increased. Yes, with recourse factoring, that's called efficiency, because the chances of bad debts I've handed over to others. Early settlement discounts, that's called efficiency of the trade receivable management. Strict monitoring of receiving the customer or allowing the customer credit, strict controls, that's efficiency. But invoice discounting, it's not about increase the efficiency of trade receivable management. Yes, we can collect the cash, and it's about the cash management. So that means that's here 1 and 3 only. I strongly suggest that you need to aware about these points. Invoice discounting is a financing arrangement, Only the discounter, the bank, has no relationship with the customer and does not take over collection of the debts. That's a point. So that's a point. Next. Come on. Final. Last OTQ. Which of the following leads to conflict between working capital objective of liquidity and profitability? Which of the 4 matters that leads to conflict between working capital objective about liquidity and profitability? One by one. Listen carefully. Using EOQ model to determine inventory ordering policy. One by one. Read it carefully first. Don't take decision. Using EOQ model to determine inventory ordering policy. Offering early settlement discount to customer to encourage prompt payment of debts. Limiting the use of cash balance held to those required to meet normal business needs. Using Miller or model to manage cash levels. So you have read it, you have understand the requirement. Now it's time to take final decision. Leads to conflict between working capital objective and liquidity and profitability. Number 1, using EOQ model to determine inventory ordering policy. If we use the economic order quantity, it's make sure that our profitability it's best with our position, because the combination of the cost of ordering and holding it's minimum, and economic order quantity having the best cost with the best liquidity. The smoothness of the inventory management reflects the liquidity. So it's not about the conflict about working capital objectives. So first, it's not about the conflict. Number 2, offering early settlement discount to customer to encourage prompt payments of debts. Okay, why we are here to offer the customer to pay early debts? Because we wanted to avoid bad debts. But here we need to analyze the situation. Is this the point of benefit? Benefit in terms of profitability? We need to analyze first. Is there, if we offer the settlement discount, we will get the profitability? Yes, of course, if we offer that for early settlements, our liquidity will improve. This is for sure. If customer pay the amount with early settlement, that's our liquidity will improve. But either we are either to maintain liquidity, either to maintain liquidity. On the other side, the profitability become compromise. Yes or no? We need to analyze. So before analysis, it may be the conflict between these two objective points. Yes, once you analyze the position and you have identified that, okay, if we offer the discount, our position in terms of profitability will become increased because of its net benefit. So that means profitability will also increase and liquidity also increase. But before analysis or before identify the exact situation, this offering of early settlement discount to customer to encourage prompt payments leads a conflict between the objective of liquidity and profitability before the analysis. So yes, it's absolutely right. This is the point. Number 3, limiting the level of cash balance held to those required meet the normal business need. It's a good activity. We have to maintain a minimum level of cash balance for the business activity to maintain the liquidity point. And of course, no opportunity cost. That means no compromise with the profitability. So this statement does not reflect any conflict of working capital objectives. Last one, using Miller or model to manage cash. With the Miller or model, if we really manage cash, our liquidity and profitability both manage exactly. It's not lead to conflict. So only the second statement reflect before analysis that leads to the conflict between working capital objective of liquidity and profitability. That's a point. You need to know early settlement discount to customer. This may not beneficial. Cost benefit analysis need to be performed. May be possible. Rest of the 3 points, it's absolutely not to develop any conflict. But early settlement discount before the analysis may be possible. That is not beneficial. So point number 2. That's a point. That's all over from this question. That's we have done with the agenda. According to the agenda, we have covered the section A type question, 5 questions. We have covered section B type 1 question, and this is what we are doing, the qualitative practice.